Option trading can be a complex and risky endeavor, and there is no guaranteed way to consistently make a profit. However, there are some strategies and principles that experienced traders use to increase their chances of success. Here are a few key points to consider. Educate yourself. It's crucial to have a solid understanding of how options work, including the various strategies and terminology involved. Learn about concepts such as call options, put options, strike price, expiration date, and implied volatility. There are many books, online courses, and resources available to help you learn. Develop a trading plan. Before entering any trades, create a well-thought-out trading plan. Define your financial goals, risk tolerance, and preferred strategies. Consider factors such as the underlying asset you want to trade, the timeframes you'll focus on, and the risk management techniques you'll employ. Practice with virtual trading. Many brokerage platforms offer virtual trading accounts that allow you to practice option trading without using real money. This can be a great way to gain experience and test out different strategies before risking your capital. Use risk management techniques. Options trading can be volatile, so it's essential to manage your risk. One common approach is to use stop-loss orders to limit potential losses on a trade. Additionally, diversify your options portfolio to spread the risk across different assets and strategies. Choose the right option strategy. There are numerous option strategies available, each with its own risk and reward profile. Some popular strategies include buying call or put options, selling covered calls, and using spreads, e.g., vertical spreads or iron condors. Each strategy has its own considerations, so research and choose the ones that align with your trading plan and risk tolerance. Analyze the underlying asset. Perform thorough analysis of the underlying asset you plan to trade options on. Consider both fundamental analysis, e.g., financial statements, industry trends, news, and technical analysis, e.g., chart patterns, indicators, to help you make informed trading decisions. Monitor market volatility. Volatility plays a significant role in options pricing. Higher volatility generally leads to higher option premiums, but it also increases the risk. Stay informed about market news, earnings announcements, and other events that can impact volatility. Adjust your strategies accordingly. Continuously learn and adapt. The options market is constantly evolving, so it's important to stay updated with market trends and changes. Stay informed through financial news, industry publications, and trading forums. Continuously evaluate and refine your strategies based on your experiences and new information. Remember that options trading involves a level of risk, and there are no guarantees of profits. It's crucial to start small, trade with money you can afford to lose, and gradually increase your position sizes as you gain experience and confidence. Consider consulting with a financial advisor or experienced options trader for personalized guidance based on your specific situation.